Hello, listeners. I'm thrilled to welcome you to a new podcast series from CPE, Alternative Disruptors. I'm your host, Tudor Scolca-Seușan. Join me and my guests in exploring the world of alternative real estate. From data centers to life science, we'll look at the current trends and issues facing these once niche sectors. Data center development and investment are off the charts these days. As artificial intelligence is on everyone's mind, the computational needs to sustain it grow ever larger, which in turn places a huge strain on the electrical grid. To meet this unprecedented level of demand, new solutions are popping up in the sector. In this inaugural episode of Alternative Disruptors, I sat down with Alex Stoewer, CEO of Greenlight Data Centers. Alex's experience in real estate and investing in the energy sector has put him in a favorable position to explore a new approach when it comes to meeting demand for data centers. His new company develops facilities with a speed-to-market focus, finding the right size and the right region to build in. Take a listen as I talk with Alex about his new company and what this right size model means for the data center sector. Hi, Alex. Welcome to the show. Thank you so much for taking the time to do this.
No, thank you. Very excited to be here.
To kick things off, could you please tell me a bit about yourself and how Greenlight Data Centers came to be?
Yeah, maybe first I'll just touch on what Greenlight is. So we're a data center developer that prioritizes speed to market over everything else. So it's a power first process. We go and we try to find pockets of power that exists in North America where you can energize a data center that's between 20 megawatts and 100 megawatts on a compressed timeline, ideally using in-place infrastructure, existing substations, existing electrical infrastructure, existing transmission, and try to bring that data center to market as quickly as we possibly can to take advantage of what we see as a demand overhang for high density rack space that exists right now. So leading up to that, my background is generally in real estate. I started out in real estate investment banking. So in 2019, I launched my first startup, which was investing in energy assets. Meanwhile, another old friend of mine from Goldman had launched another startup called Digital Power Optimization that sounded very intriguing. Ultimately, I decided to stop what I was doing and join him as a co-founder of Digital Power Optimization, and that was in 2020. So we built that business together. That business was built around co-locating Bitcoin mining data centers with renewable power generation assets. And it was really an energy arbitrage play at the end of the day. It was not so much about finding the best site for a data center. It was about finding the places where you had wasted or negative value power that exists in this country and turning that wasted power into Bitcoin. The way that we did this is we went out to the energy sector and really just blasted everybody that we could that was utility, independent power producer, developer, whatever it happens to be. And we explained that there's this strategy they could use to add a flexible load to some of their generation sites and maximize their EBITDA by just effectively diverting some of that power into the Bitcoin mine when power prices are extremely low or negative. And we formed a lot of good relationships with these companies in the energy sector. Meanwhile, as it became more and more clear that AI data centers were viable outside of the major data center markets, and you saw some big co-located deals getting done, we realized that a lot of the energy companies that we were working with actually had great AI data center sites in their portfolios. There were different sites than the renewable power that we were working on, but in a lot of cases, they had places where they could serve a lot of power quickly at a reasonable price, and it had all the other ingredients required to build an AI data center. So we went down that path and starting in 2023, working with some of these power companies to find locations within their footprints where you could site an AI data center, and ultimately decided to split that strategy into a different business, which is now Greenlight Data Centers.
That sounds awesome. So your previous experience really fit like a glove with what you're doing now with Greenlight.
It does feel that way, yeah.
Both DPO and your previous experience in asset investment in the energy sector, right?
Yep.
So I've been covering data centers for quite a while now, and I noticed that over the past 2 years or so, developing these facilities feels more like power development than real estate, right?
Yep.
So what do you think changed around that?
Yeah, look, I think it's an excellent point. I think that for certain data center functions, the location, the physical location is paramount. You have to be in the place with the lowest latency possible. If you're going to do high frequency trading, if you're going to do a lot of other functions that require extremely low latency, then you care about having that right plot of land in Ashburn, Virginia, or on top of a Keurig
Exactly.
hotel, or whatever it might be.
Yeah.
For the majority of data center functions, especially now with AI and GPU-based computing, it's really all about the power. The power is the real estate. If
Yeah.
you go and gain control of a certain amount of power in a place where a data center is viable, in a place where the latency is reasonable, and you have all the other ingredients that you need, that power is the land, effectively. It's kind of like having a site where you can go and build an apartment complex in a really nice city. The power is the harder part to get, because a lot of times these data centers are in more suburban or rural locations. There are plenty of pieces of land in this country near substations that are just unimproved, where you could go and build a substation and theoretically connect to power. But the question is, when will you get that power? What kinds of transmission and distribution upgrades are required in order to do it? How much is the utility willing to play ball in order to deliver that in a reasonable amount of time? And can you get the community incentives that you need with the tax abatements and things like that in order to make the data center viable? So I think once you start narrowing it down, you realize that it actually is a pretty scarce resource, these sites where you can go build
Yeah.
a data center quickly. And the biggest scarcity level is not the land, it's the power.
Yeah, especially considering that some of these regions in the US are a bit strained for power, right?
Right. And that's a big part of our strategy. It's going to places where they're less constrained for power. So our focus is really on, for the most part, it's on the middle third of the US. We've looked at some sites elsewhere, but I think this big swath of the country where you have not just a lot of wind and solar generation, but during a lot of the time, too much wind and solar generation that the grid can't even handle. In addition, you have quite a bit of nat gas to plug those gaps when the wind isn't blowing or the sun isn't shining. There's a lot of energy abundance in the middle third of this country. And I think that that's largely been ignored by the data center industry. Obviously, there are some cities within the Midwest that have a fair number of data centers, but there are a lot of cities that don't really have any. And I think there are a lot of more rural locations that are within an hour's drive of the big cities that also don't necessarily have any data centers. There's a lot of power available in places like that. And I think that that's been overlooked, and that's what we're trying to take advantage of.
Oh yeah, so you're really leveraging what you were talking about earlier with what you were doing with the DPO. So looking
Right.
for these places where power is more or less goes to waste if not used in such quantities.
Yeah, it's a little bit different where with DPO, if you're putting a Bitcoin mine on site at a wind asset, for example,
Okay.
you are mining Bitcoin instead of just curtailing the power generation. It is a
Oh, right.
one-to-one, like the power would have been wasted, instead it's going to be used. Or the power would have been sold into the grid at a negative price in order to get the credits. Instead, that power is going to be used for something that has positive value. When you're talking about what we're doing, it's working with those same entities that might have those generation assets in their footprints, but it becomes their problem if they're a co-op or utility and people are pumping more power into the grid than they could necessarily use at a given time. So they might have a substation within their system where they say, hey, I could serve you 40 megawatts of power at this substation in 9 months or in 12 months, and it's not going to cost you very much. There's no transmission upgrades required. And those co-ops and smaller utilities or utilities in the Midwest that have locations like that within the portfolios, we think that they're the best people to point us to those locations. So instead of looking at it from a real estate perspective, saying, okay, there's 500 plots near substations, let me go figure
Yeah.
out which ones might have more power available. Going in to the economic development group at these co-ops or utilities and working with them to point to the right substation where they can deliver you power quickly, we think is a much better way to energize data centers.
Right. So this is sort of the process that you mean by power first, right? This is what you do basically. Yeah. So when talking it over with a potential client, what must be true on day one for them, and how does that
For
translate
the,
into like schedule certainty? Like what must be
you
true
mean
before
if we're
you.
working with a power company that's going to be serving load?
Right, or with someone who
Yep.
wants to utilize that power.
Yeah, well, look, I think it's a different question for different
Oh,
audience, but
okay.
for the power company that's going to serve load, you really want to know how are you going to be delivering this power? What upgrades are required exactly? If we're going to be paying for those upgrades, which we generally would, how much certainty can we have around that cost? And more importantly, how much certainty can we have around that timeline? So we'll want to do a lot of diligence around what is your line of sight on getting the right transformers or switchgear or whatever long lead time items that might be a part of that. How much certainty do you have around when that can be delivered? And really doing our diligence around the physical nature of what's getting done there, because that has the biggest risk to being able to deliver power at a given site. When you're talking about a tenant that's going to ultimately rent the data center from us, because we're a real estate company at the end of the day, we're not trying to necessarily be like a technology company exactly. We want to develop data centers and own real estate and rent those data centers out to technology companies.
Yeah.
They have a lot of questions that they ask. I mean, there is a very long list of requirements because there's so much capital being invested in these sites. If you think about it, a 50 megawatt data center, which if you look at all the headlines out there, 50 megawatts is a tiny data center. Everybody wants to talk about 500 megawatts, a gigawatt.
Yeah, exactly.
A 50 megawatt data center is about $500 million to build just for the asset itself, not including any of the computers that go inside.
Yeah, exactly.
The computers that go inside and all the IT infrastructure that goes along with that, that could be another $1.5 billion that goes into a 50 megawatt data center.
Yeah.
So it's a tremendous investment that goes into a site that is not necessarily making the headlines, and it's potentially in a maybe more rural area or a smaller city, not necessarily in one of these major data center hubs. So the end user is going to want to make sure that they check all the boxes. And I think a very big one is fiber availability. And that's going to be latency to the nearest carrier hotels. How long does it take? How many milliseconds does it take for data to travel from your data center into these different places? It's going to be carrier diversity, making sure that you have reliability of getting internet into that data center if one of the fiber lines goes down or something like that. There are questions around what is your redundancy going to be on site, because a lot of people don't know, but data centers are built out to withstand an outage of a piece of equipment or the grid or whatever, so that they can be energized over 99.9% of the time, sometimes as much as 5 nines. That means that you are going to have 2 of everything. And I think the data center tenant is going to pay a lot of attention to what's that build out going to look like, how much redundancy you're going to have. And I think most importantly, how are you going to generate power in the event that the grid goes down?
Yeah, the all these contingency levels are really important for this infrastructure.
Yeah.
And even more so considering some of the scales that you mentioned earlier, that megawatt seems small these days,
Right.
compared to like the types of projects that get built. There's actually a lot of spillover of these mega projects from like the main markets in the US to secondary, tertiary markets. Atlanta is one example that comes to mind, for example. And do you find yourself competing for power with these mega projects?
Our goal is not to compete for power with the mega projects. It's really it's a different strategy. So if you go and you say, okay, I want to do 500 megawatts at this location, there's going to be phase 1, phase 2, phase 3, phase 4. It's gonna grow a lot over time. And it might be 8 years before you get fully energized at a site like that.
Exactly.
And if you are a hyperscaler, you're a very, very large data center developer, and you want to have one site where you have that much computing in one place, then there's no reason to go into that. Our goal is a little bit different, where we are really focused on trying to bring data centers to market as quickly as possible. And so we're not going to try to go and step into situations like that where we're competing for power that's going to take 5 to 8 years to get delivered. We're going to try to find those locations that maybe the big hyperscalers aren't even looking at, where you can go and get 20, 30, 40, 50 megawatts in the very near term. And then maybe you can go up to 100 within 2 years or something like that. I think that when you talk about going to secondary and tertiary markets, I mean, Atlanta is a good example. It took a lot of spillover from places like Ashburn, Virginia, Chicago, some of the traditional data center markets. But we're looking at places that are even a couple steps down from that in terms of being popular data center market today. And I think the hyperscalers are doing that too. I mean, look at look at Council Bluffs, Iowa. By some metrics, the biggest AI cluster in the world is in southwestern Iowa, and this is not a big city. I mean, it's in the middle of the country, which is great from a latency standpoint to get everywhere. But this is not a major data center market otherwise, aside from Google going and building that out. Microsoft has been in Quincy, Washington, with a very large facility for many years. The main reason they went there is because they had cheap hydropower. They had cheap green hydropower, and Quincy, Washington is out in the middle of nowhere, but they built a big data center there. And now Meta's building one, and there are some other ones going in there too.
Yeah.
So I don't think it's actually that unusual to go and build data centers in more rural locations. It's just more unusual for people other than the big hyperscalers to spearhead that.
Besides power availability, are there any other traits that these markets have that make them very attractive?
Yeah, look, I think the biggest one is going to be incentives. So I think a big key is the fact that we are working in states that want more data centers, states that look at that as, okay, they're bringing investment, they're bringing high-tech jobs, they're bringing jobs that are involved in construction. And a lot of it's actually very high-tech construction. I mean, you're talking about tens of millions of dollars being spent on electricians and HVAC specialists and people that actually make good money. These states want that kind of economic activity and are incentivizing that. There are a number of other states that reasonably are saying, I think we've got enough data centers now. It's potentially putting a strain on the grid. It is turning our suburbs into industrial areas. If you look at Northern Virginia, I think that's a great example, and really the whole DC area. They probably, from a community standpoint, don't necessarily want more data centers coming in. You're seeing some of that in other cities as well. Atlanta is actually an example of that lately. But if you talk about going and building a data center outside of Kansas City on the Missouri side, or Springfield, Missouri, or if you are building something outside of Oklahoma or Oklahoma City or Tulsa, Oklahoma, these are places that are really eager to have you build a data center. There's a lot of energy availability. There is a lot of desire for a data center construction to take place. There's a lot of desire for those high-tech jobs to come in. And they're willing to provide some incentives that make a very, very big difference. Again, if you're investing $2 billion, including the IT infrastructure that's coming in, any sales tax incentive you can get, any property tax incentive you can get, goes a really, really long way, more so than having cheap power. So that is another really big key, and we're only focused on places where we can have the community welcome what we're doing and ultimately incentivize what we're doing.
Yeah, and there's not a lot of construction companies like that can handle this sort of work, like because it's a very specialized build as opposed to industrial or anything that's quite similar. Yeah, it's highly specialized, and there's also been a lot of talk about the talent gap in data centers, and I think that applies to construction as well, right?
I think it does. I think that people would be surprised at the other high-tech infrastructure that gets built in this country that people don't necessarily know about. You talk about, I mean, the chip fabrication facilities that are being built is a high-profile example, but there's a lot of lab space that needs to be super clean. There is a lot of hospitals. There are a lot of construction companies out there that actually have a lot of experience in these big mission critical high-tech projects, but not necessarily high density data centers. And we find that they do have the right kind of experience to go and build data centers like this. I think in a pinch, you might not necessarily bring in somebody who is headquartered right in the area where you're building if you don't find the right construction company in that particular area. But there's probably somebody in the state or somebody in the region that has actually done a number of data centers, because data centers are sprinkled all throughout the country. So I think it's an area where more and more people should be pivoting to because of the amount of data center construction taking place. And I think that it's a good opportunity for people in the construction world or in the trades to start focusing on that. But I don't think that that's going to be anything that causes data centers to be delayed.
So you spoke before about these markets that where communities have held concerns about data centers popping up all over. So what's your take on that, and what's your playbook around community benefits when developing data centers?
Yeah, look, it's critically important. Even if you're going into a state where they want data centers, it might not be the case that everybody in the county or in the municipality wants data centers. You're always going to have some people that have some very serious and reasonable questions about what it is you're doing. how you're going
Yeah.
to be potentially making noise, how you're going to be potentially putting more strain on the power grid. That's something that we obviously take very seriously. And it's really primary to what we're doing. Like I said earlier, we only want to build in places where the community is welcoming of what we're doing. And we go out very early after going and acquiring the land. But after that, the first thing we do is go out to the people in the community that are asking questions, as well as the people in positions of power, like the county judge or the mayor, whoever it happens to be, and just making it clear exactly what it is we're doing. Like, hey, we're not going to try to build some 500 megawatt campus that's going to totally transform the character of your area. We're also not going to build something that is like Bitcoin mines have been accused of being, which is really, really loud, totally inconsiderate of the neighbors. That's not what this is. This is much more of a buttoned up high-tech facility, and it's something that they should want in their community if they have all the right information. So we try to reach out to everybody we can. We try to publicize what it is that we're doing as early as possible so people don't feel like they're caught off guard, and we answer people's questions.
Right.
So I think going to these community meetings and showing up in person and being able to answer people's questions in the courthouse or wherever it happens to be, that is something that is really valuable.
Yeah, that makes a lot of sense. And zooming out a bit to the whole data center sector at large, do you think that there's more room for transparency around these issues and similar ones in the sector overall?
Honestly, I think that the data center sector is pretty transparent because of the incentives that are tied up in it. I think most
Right.
data center developers are getting incentivized in one way or another. And if the public is going to be in some ways subsidizing what it is that you're building, there is a demand from the public that you tell them exactly what it is that you're doing. So I don't think that this is like you sometimes find in other commercial real estate developments where there's a lot of secrecy around it and there's a lot of
Yeah,
people
right.
trying to circumvent the system.
Hmm.
I think that the transparency is there. I think in some cases the problem is with the clash between trying to build a very, very, very large data center in what is otherwise a bedroom community. And I think when they get too close to each other, that can become a concern. So I think that the transparency is there, and I think that in a lot of cases the communities are being very reasonable and pushing back against what's getting developed in their areas. And I think that what gets built ultimately is going to be the facilities that are a little bit less impactful to the communities. Maybe they're a little bit further removed from the core of those suburbs. Maybe they are in locations that aren't as densely populated. I think that might be where this goes.
Yeah. Looking ahead, uh, what are you most excited about for the data center sector in 2026 and beyond that even?
Yeah, look, I think what's really fascinating about the sector is that there's just a structural overhang of demand for high density rack space. A lot of people don't realize that 5 years ago, there really wasn't any high density rack space. All the data centers in the whole world were all optimized for either CPU based computing or very early GPU based computing that ran at a pretty low density. And now they're delivering racks that can require as much as 180 kilowatts a rack. That's about 20 times the density of a standard data center rack. So fitting that into the data center model, it's almost like high density rack space is a sub asset class of data centers generally. And it is a very, very small minority of the space that currently exists. And meanwhile, they're building more and more chips. You look at NVIDIA's sales projections, you look at the multiples by which their chip deliveries are expected to grow in the next 5 years.
Yeah.
Then you add in AMD, which is making a lot of high density chips. They just signed a $100 billion deal with OpenAI.
Yeah,
And the amount of growth they're expected to have. I mean, they're almost $1 trillion company now, and I think their PE ratio is into the 100s. So they're going to have to deliver a lot more chips in the future than they're delivering right now. There isn't enough high density rack space to serve that, and the high density rack space that's being developed is going to be delivered more slowly than the chip fabrication is ramping up. So I think being in a market where you have the wind so strongly at your back because demand is outpacing supply and is the gap's probably even going to widen in the next few years, that's something that's really exciting for us. I think it's going to be it's going to be the case that you're having to build your own generation to build another data center at some point. So we're excited about where we're at right now. We're excited to be in an industry that's growing this quickly.
Yeah, I think the competition is very fierce for that, and as you said, yeah, these opportunities are not gonna be there for long. Yeah, that's awesome. So to wrap up here, do you want to do? I was thinking to do this 3 additional questions, sort of like a lightning round, if you want.
Sure. Yeah, happy to.
The first one would be, what's the most overrated risk investors fixate on today?
It's a good question. I mean, I think we're in an environment now where people are much more likely to underrate risk than they are to
Right.
overrate risk. We've been in a bull market for a long time. And I think that when you see that, you see people start ignoring risks that are legitimate and I think will become obvious in hindsight. So, I think there are some that are still being overrated. I think one of them is, in particularly the data center space, if you're a data center tenant, a lot of times you're focusing a lot on what is the grid reliability in that particular location, or what is the history of that utility or co-op in terms of delivering power, and what is the uptime then. And if it's, 99.5 versus 99.9, you might look at that and say, well, I'd much rather have the grid that has delivered historically 99.9% of the time. I think that risk is a little bit overrated, mainly because you always have backup generation on site anyway. So if you're going to spend the money and maintain some sort of backup generation on site, whether you're running that for 0.5% of the year or 0.1% of the year, your data center is still going to be working. You're not going to actually have downtime from that. We think that people tend to fixate on that, and they probably shouldn't. And I think people are going to become more and more open to it as more people are becoming open to the fact that you really can run a data center on behind the meter generation.
Yeah. So power usage effectiveness is a bit in itself sort of an overrated metric.
Well, I wouldn't say that. Power usage effectiveness is a little different. That's how much. So power usage effectiveness is really all about what is the ratio of the total power use that you have to the IT load that you have. So what percentage of the power that you use is actually going into the computers to do computing, and then how much is left over that's running cooling and all these other ancillary systems. So if you have a very inefficient cooling method, or if you're located in a really, really hot location, then your power usage effectiveness is going to be worse. That's worse cost-wise, you're buying more electricity than you need to, and it's also worse environmentally. So that's a little bit of a different metric. What I would say is grid reliability is one that people need to maybe focus on a little bit less.
Oh, okay. Thanks for clarifying that. Okay, so the second question would be, what's the most underrated trait that impacts speed to market, since you focus on that at Greenlight?
Yeah, I mean, we already talked about it quite a bit, but I would say community relationships. I think that, sometimes these things feel like they come out of left field to the developer, where they expect a vote to be unanimous yes, and it turns out to be a narrow no. And I think that people are coming around to that obviously quite a bit, and we have seen some hyperscalers especially get blindsided. In places like Maryland, Minnesota, a number of other places, you've seen some votes go against the hyperscalers that they didn't expect. And I think that has been historically, but I think now it is very much front and center as it probably should be.
Oh, so moving on to wrapping things up for good this time. Is there a myth that you would like to retire about AI data centers?
Yeah, I think that a lot of people think about two types of AI data centers. They think that you have training facilities, which are 500 plus megawatts, potentially out in the middle of nowhere. You can put it in the Northwest Territories or Iceland or whatever, it doesn't matter. And you're just going to go and train models there, and that's all you're going to do. And then you have inferencing data centers. Inferencing data centers, only thing that matters is latency. You want to put those right in the middle of the data center hubs. The lowest latency possible is absolutely critical. And our view is that there's a little bit more blurring of those lines. On one hand, training data centers don't need hundreds of megawatts to train a valuable model. If you look back at ChatGPT-4, which I think was the big leap from GPT-3, 4 or 3 to 4, was when people started realizing the capabilities of some of these large language models. That was trained on less than a tenth of a 500 megawatt data center, and it was trained using very dated chips by today's standards. So whatever number of megawatts that took to train, you'd probably train it on like a quarter of those megawatts right now using today's chips. So if you think about all the different AI models that are being trained, that will be trained, they're absolutely going to be continual training for frontier large language models slash, maybe eventually general intelligence type of models. And those should be done at massive computing facilities, because the more power you can throw at a model, the better it's probably going to be over time. On the other hand, there are only so many companies that have the resources to run that kind of computing, like 500 megawatts or a gigawatt or more. And there are only so many companies that are even trying to develop models that are frontier, cutting edge, large language models. So those facilities absolutely need to be there. But we think that in addition to that, there are going to be a lot of models that are trained in smaller data centers. They might be trained by companies that are doing a specialized version of one of the large language models. There might be companies that are just using all their own data, a bunch of customer data, a bunch of factory data, whatever it might be, and throwing all that into 5 megawatts of GPUs and having that spit out a model that is much more predictive than if they hadn't gone and done that. So we view training as being something that can be done in much smaller locations than some of these hyperscale facilities that you hear about. At the same time, we view inference as something that doesn't necessarily need to be in the middle of a data center hub. There's some tolerance for latency for the vast majority of inferencing tasks. If you think about the minimum amount of latency that a human can perceive is something like 100 milliseconds. And if you think about the latency between, say, Minneapolis and Chicago, which is 400 miles, that is going to be under 10 milliseconds. So you could shoot data back and forth 10 times between those two places before you actually have a human even notice it. And even if they do notice it, it's actually not that big. You're talking about a tenth of a second. So when computers are talking to computers, you do need to have low latency. It is important. It's always going to be important for inferencing, but it's not necessarily going to be paramount. And I think that there is already a greater tolerance for being a little bit outside of those hubs for a lot of inferencing functions. Not high frequency trading, not things that really need a lot of complex back and forth real-time computer-to-computer inferencing between data centers. But we think that the majority of inferencing functions actually can be performed in locations that are outside of the major data center hubs.
Wow, that's really interesting. I haven't thought of that. That's a bit of a layer of abstraction there with how you think about latency and distances in miles, which is way easier to grasp. That's cool. Well, is there anything else that you think we should have touched on, or that we didn't get a chance to?
No, I think this was a great interview. Great questions. Thank you for the opportunity to do this.
Yeah, well, Alex, thank you so much once again for taking the time to do this and for such an insightful conversation. And thank you all for listening to this first episode of Alternative Disruptors. Don't forget to rate, review, and like on whatever platform you're using to listen. As a reminder, find CP's podcasts on YouTube, Spotify, and Apple Podcasts. For the latest news, trends, and podcasts about commercial real estate, check out cpexecutive.com. Join us next quarter on Alternative Disruptors when we'll discuss what 2026 has in store. Till next time.